Ira Epstein with your financial market wrap-up, and this wrap-up is your weekend edition for this April 11th, Friday, 2025. And what a wild, wild week. Be it in the stock market, be it in this market, it was one of the wildest that I've ever seen. That's a pretty big statement. It was hard to make any money in this market. If you did, congratulations, but it was a hard market. It whipped every which way. It started with the stock market. The good news is certain markets broke away from it, the grain markets. And I think people are forgetting a key part of this. As the dollar index has crashed, and it was down today, it's down to 99.82. This is a market down almost 10% now for the year. It makes our goods that are priced in dollars more valuable, be it the grain markets. If you want to buy our energy, it's cheaper just because of the pricing. I didn't say the board here is cheaper because of that, which will give us demand for goods as time goes on. Because what I really think the Trump administration is engineering is a systematic change in the pricing of the dollar. I also believe, like it or not, you're not going back to those interest rates that the Fed thought you were going to go to as this is all taking place. I mean, if you really pay attention to the bond and note market, it's a disaster for us. The bonds were down another 22, so you're just shy of 5%. You take a look at the 10-year note, you're back into the 4.5 zone here. What's going to make these markets add any yield? There's so much uncertainty. That does not mean you can't get these rallies later on, but what the market is panicking. Day-to-day news, the tariffs, what are going on, the 184 lawsuits that have hit the president since he took office. I mean, it's insanity. 184. We're only in April. He took April 11th, and he took office January 20th. I mean, I just think about it. It's all the craziness that is going on. Today you had good and bad news. Now let me explain that. Great news was the producer price index, but it's March numbers. Listen to me. They were down 0.4. They expected them up 0.2. The PPIX food and energy was down 0.1. They expected it up 0.3. These are great numbers. Personal consumption down a little bit. Yeah, they revised the February number up 0.1 from 0. Not enough to take it away. Great. Now the terrible. The University of Michigan consumer sentiment looks forward. It's looking now and what they're expecting, and that's how you come to sentiment. Well, for the month of April, so what we have now is 50.8. In March, it was 57. They were looking for it to decline, but not by that amount, from 54.5 to 50.8. Huge decline. Current conditions down to 56.5. That's still 5 lower than they expected, which is way lower than what we had in March. And the expectation, scary at 47.2 versus March 52.6, an expected 50.8. And when you look at inflation for a year out, the market's looking for around 6.1%, but when you look longer term, it's building in 6.7%. So the market is saying, there's a price to all this, and it's going to be inflationary, which flies in the face of the president saying we're not going to see inflation. Now that the tariff wars have happened, remember, March they were first level. Now they've all happened since then. Now that they've happened, you have a bit of a different game, and that's what you got to look at. So let's take a look, and you can see a wild day today. I mean, if you think you can keep up with this, you're better than most. Even the gold, 32.44. I thought the number this year would be, as you know, the 3,200 level. It's already through what I thought. Most of the others coming back. Copper coming up. Why? Because China doesn't have a choice. They have to support the copper market to get their engine going. They are an export-driven economy at this point. Being that, they got to get exports out the door. They just lost their biggest client, the United States. No exports. So it goes from a deficit, trade deficit of nearly $454 billion, all the way to zero. You think you can make that up right away? I don't think so. So they're going to have to do things in order to do them. They got factories going. They got to get consumer confidence up, and all their people will read is what they want them to read. Everything's controlled there. So good thing that you understand that you can't come out and say the things we in America can say. People there don't have these rights. Okay. So we take a look at what's going on. And what the S&P has done, if you look at the 18-month moving average, is it's gone down to the number that I told you, that if it comes down hard, that would be your first support zone. So you're down to 53.91. That number's 54.66.5. That's the battleground now. You're in that zone. The fact that the market was able to close under it is bearish. We then go to the E-mini S&P. You've been under that number, and what has happened since that happened? Down. Now, for the week, you're up 5.5%. Wonderful. So you get under 5,200, you get a bounce. But when you closed under this number at 6,000, that was a heck of a break. That's 15% almost. Heck of a break. When you look at how the market's broken down, you came in, there's no level here that I can find support against. So the market came down, had a big bounce for the week, but look at the size of the range this week. 55.28 to 48.32. So we have a 700-point range in the market. And you think that's normal. That is nowhere near normal, my friends. That is monstrous in its size. The pattern's still bearish, not bullish. You have lower highs, lower lows. The resistance, 58, 52.5, the 18-week moving average, and it will drop down. When it opens Sunday night, it'll drop because if you add these numbers and you drop the ones back there, 1 week of it, it's just going to fall the way moving averages do. You found the support where we talked last week. You just might find that support. If you'll recall, this is where the market was at the end of last week. And you had been under the Bollinger Band to the 100-week average. I am certain I would have said, if the market continues down from here, you've opened the door for 46.86, another 500 points. The market stays out of the Bollinger Band only 5% of the time. So I would have been looking at all that and going, well, what do you do here? Now watch how it does. You come down for that, and now you get your bounce, Bollinger Band and price together. That's not a turn of trend. What that does is it still keeps the downtrend, but you step back into the Bollinger Band, which keeps the downtrend alive and not overdone. That's the scary part. When you come to the slow stochastics, they are oversold. If the numbers can get themselves over 30, they're not oversold anymore. So I guess what I'm saying is the all clear has not been sounded. When you come to the Dow, it's the same pattern. Lower highs, lower lows. Again, you got last week down to the 100-week average. Under it, you either come here or I would be saying you only stay under the Bollinger Band 5% of the time. I don't know when it's going to get back in it, but it's going to try, and it's going to try it hard. You did it this week. Now that you've done it, you're still very much in the downtrend. The NASDAQ, the same thing. Let me see if I can get that to do it for us. There you come. You're under it, under the Bollinger Band, snap back in. The weakest, you've heard me say it all the way through, has been your Russell. And in the Russell, barely back in it. It's just the weakest of everything. Big resistance at the 100, 200-day average. And in this particular market, are you embedded on a weekly basis? Embedded means that you'd have the slow stochastic reading 3 weeks in a row underneath 20. 1, 2, 3. You've absolutely got that. And you've had it going. You've actually got 5. So it hasn't even lifted out of there. Now, if it does, and I'm hoping it does, the market might get a rally back up here, and I know my eyes will be wide open to sell one of the indices, and it would be the Russell that I go after. You might say, why? I'll explain it in a moment to you. In the DAX, higher high, lower low, fighting a battle at the 18-week average for direction, no trend. This is why this and the 10-year and the others is why I think the Russell's got major problems. what makes up the Russell are the lower cap companies. They're generally very capital intensive. Starting out, they have good gains, then they don't. Balance sheets are very different than in the S&P, the Dow, and so on. So when I look at that and I go, what are interest rates? Interest rates in the U.S. went in the 30-year bond to 5%. Businesses don't go in and borrow against a 30-year bond. I know you know that. But they do look the 10-year, and banks do, to see what it's doing. And certainly the 6-month, the 2-month, and the volatility's there, and the rates are high. You're back near 4.5% in the 10-year. This market is void of a trend. What it did do, and I'm really proud of my work, the market went up, and I know I told you here, the videos are on YouTube. I said, you're in a big resistance area. You know, could you keep going? You could, but you're overbought. You're there. I think the pros came out. I know I would have said that. You know, if I didn't, slap me in the face. But that's what I should have been saying. And then we look, let me take you back there. And now here is where you're at. So this time around, I think you have a shot at going back down to the 110.27. Are we trending? No. Do we have panic in the market? Yes. Is this a normal type of week? You look at this chart, you think so? I mean, we get big weeks, but nothing of this size. I think this was a historic week. I don't know what else to say. I think people lost confidence. I think there's something else. I wonder how many traders in the 30 years, basis traders they call them, got caught in big firms getting stepped on. Number 2 in the hit parade, foreign governments. I think China is selling treasuries. Japan might be, and maybe a couple of others. But this type of break and that type of instrument, with the stock market plunging and interest rates going up at the same time, I'll let historians find out why. I've got experience. There's something more to the story. 10-year, look at how it did the same thing. Now, you were over the upper Bollinger Band on last week's Friday, and the market just made a higher high and crashed and came back. This picture's not as bad. Yes, it's a big decline, but it didn't do what the 30-year did, and that's going for the lower band. So we'll see what happens here. In the dollar index, do you see anything you like in that? If you do, there's something wrong with you. What do you like with it? It's under all key averages, it's oversold, and it's down sharply. So if you look at where the year started, just follow this line right here, 110. You're down 10%, 11% for the year. That's what I look at. If the dollar's down, the euro's up dramatically. Look where it started, right in here, and look at the dramatic rally. Did traders see this coming? We were told it would come, but none of us believed it. I really believe what I'm saying. Trump administration said they're going to break interest rates. Hasn't succeeded there, by the way. He had it for a week, and now this week alone, you went up another half point in the 10-year note, and that's the one he's guiding. That's not winning. Dollar, he wanted to break. Trade deals with all the countries he wanted to break. Didn't want to pay for NATO anymore. He's getting that. I go down the list, all right? But there's fear in this economy right now, and don't you forget that. Canadian dollar, the country he was beating up all the way. Well, their currency's certainly doing a heck of a lot better than ours right now. So everybody's doing that at this point. Reading how some of the cars that are being manufactured by GM, some of the big vans that they make, they're not going to be sending them to the U.S. They're going to stop production. They're using the excuse that they don't have enough business for them right now. I think being made there, they might not fall underneath USMCA. I wonder. They're claiming Rivian's business is better for that with Amazon and so on. Higher lows, higher highs in the end. This became what? A safe haven currency play. Then we get to Bitcoin. It's just another asset. So what we've learned in this market wipeout in stock indices is we at least have a definition of what Bitcoin is. And I don't think anybody had that until this took place. There was a big battle. It is going to be your safe haven for all those reasons. I don't know. Safe havens don't go from the 107 area down to 74 while the gold market goes one way straight up. Then we look at the differential between Brent and WTI oil. And as you can see, first of all, come back here. You had one spike after you got to a negative number. Why did this happen? Do you remember that Russia and the Saudis got into this monster spat over pricing? Well, that's going on again. And it's going on between 8 OPEC countries and the ones that don't, Iran included that don't do what they're supposed to. Kazakhstan, there's a number of them. So your differential's slipping, but nothing like that yet. Here's Brent. Do you see anything bullish? The only thing friendly that I see in the market is it's under the Bollinger Band and it's oversold. So I do expect it to climb into that Bollinger Band. What happens this weekend between the talks of the U.S. and Iran is important. My instinct is both will walk out and say it's constructive. You know it wasn't if the talks break up before they start. And we know that there's a big problem. We'll see what happens. WTI holding the lower Bollinger Band down. Why? Because everybody's scared with these trade wars. World recession. All countries contracting. Unknown. This is not a safe haven. It's a commodity you use. And prices have gone back into the bear trend. Now, I'm looking in this range for the gasoline to give us a bottom for spring-summer driving in the U.S. You're right in the zone that I want to see it build from. So we'll see if that does anything. So it's exciting. And this is the time that you bring out one of the trade tools if you're an in and out trader called pivot points. Pivot points are a formula that you have in your charting software if it's worth any merit at all. And the formula finds a center line and above it, sell points, 2 sell points above, 2 below. Forex traders, sometimes they use 3 to 5 above and below. But that's how it works. And I tie momentum. So I'm trying to find, not day trade. If I'm looking to go into a market, and let's assume my worker said to go long at this number, how do I sharpen it to make it better? Maybe it's coming down into a zone and I should lift or take it down just a little bit. That's what I use it for. So I fine tune with it. IraEpstein.com. It's a video series. You take a look, follow how I teach it, and I think you'll get an edge if you use pivot points.